Hello, everyone. There's a lot of big news to cover. AMD has announced a major partnership with OpenAI, signaling OpenAI's push to diversify beyond Nvidia. Meanwhile, US tech giants are ramping up capital spending on AI infrastructure at an unprecedented pace. And I have to say it again, Google is the Mag-7 stock that's been hiding in plain sight. AMD announced a major partnership with OpenAI to supply 6 gigawatts of Instinct AI GPUs, starting with the MI450 model in late 2026. OpenAI received a warrant for up to 10% of AMD's stock, signaling a strong vote of confidence in AMD's role in the AI chip market. Wedbush analysts called this a major moment in the AI revolution, likening it to a pivotal 1996 tech milestone. This deal positions AMD alongside Nvidia in powering OpenAI's infrastructure and reflects OpenAI's strategy to diversify its AI compute resources. Analysts highlighted that AI infrastructure spending, led by Microsoft, Amazon, and Google, is expanding globally to governments and enterprises, marking the early stages of a massive investment cycle. Following the announcement, AMD's shares jumped 27%. Goldman Sachs projects that U.S. tech giants will dramatically increase infrastructure spending, with hyperscalers' total capital expenditure expected to reach $1.4 trillion between 2025 and 2027. Up from $485 billion spent between 2022 and 2024. The surge is driven by soaring demand for AI infrastructure and cloud computing. Microsoft is expected to lead, with CapEx rising from $76 billion in 2024 to $376 billion over 2025 to 2027. AWS follows, jumping from $49 billion to $321 billion. Alphabet is projected to spend $304 billion, Meta $279, Oracle $115 billion, up from just $11 billion in 2024. Back in April 2025, Alphabet's stock had dropped more than 25% in just under 2 months. Tariff worries were rattling the market, and a lot of investors were thinking it might be time to scale back on tech exposure. But I said, this drop made Alphabet too cheap to ignore. We were entering the buy zone. That call turned out to be spot on. Since then, Alphabet has returned over 57%, nearly tripling the S&P 500 over the same period. Because of this rally, I'm taking 40% of my position off the table, but I'm not turning bearish. I'm looking to buy back on any pullbacks in the coming months. Alphabet's Q2 2025 results were strong. Total revenue hit $96.4 billion, up 14% year over year, with Google Cloud alone growing 32% to $13.6 billion, crossing a $50 billion annual run rate. And here's the kicker. Even with big AI investments, their operating margins stayed steady and remain higher than Apple, Amazon, and Tesla. That shows real efficiency. Alphabet generated $66.7 billion over the past 12 months, funding massive buybacks and $85 billion in capex, all while keeping EPS healthy at $2.31. So basically, Alphabet can invest, buy back shares, and still grow earnings. On the valuation side, Alphabet looks like a bargain compared to other Mag-7 stocks. Forward PE is just 24.8x, and the PEG and EV/EBITDA metrics show it's got room to grow without overpaying. That said, from a technical standpoint, the stock is a bit extended. Prices are above the +2 standard deviation on weekly charts, which could mean a pullback is coming. I'm watching key support zones at $229.85 and $213.20. These could be perfect spots to add back to positions if the market dips. And while some bullish patterns suggest upside is still possible, the takeaway is that Alphabet is the most balanced trade in the Mag-7. Strong growth, solid profitability, attractive valuation, and relatively limited downside. So my strategy is to hold the core position and be ready to buy on dips. If you're looking for a risk-adjusted way to play big tech, Alphabet is definitely one to watch. That's all for today. See you in the next one.